Welcome everyone to episode 204 of the Trust the Plan podcast. I'm Nick.
And I'm Jim.
And we hope you had a wonderful Thanksgiving. Jim?
Absolutely.
How was your Thanksgiving?
Wonderful.
Yeah?
Great as always.
Celebrating
Good to see family.
Celebrating the Lions win and a Michigan win.
That's right, yep. Being fortune tellers here.
Optimistic?
Yeah, optimistic.
Yeah. But the Lions are looking pretty good, right?
Man, they had a good game, I guess it was, a week or two ago now, against the Bears.
Yeah, the
really
Bears.
Good comeback.
Excellent.
It was fun to watch.
I think that was a crystal ball moment for Michigan, Ohio State.
I know,
right?
It was.
The last play of the game.
Yeah, good old Aiden Hutchinson bringing down Ohio State, Justin Fields.
But it's nice that America gets to watch a good Lions team on Thanksgiving. They've been suffering through for how many years?
It's very true. People for years would question, why do the Lions always get to play on Thanksgiving?
That's right.
So hopefully now they're the premier game. Yeah.
Okay, so we're talking this episode about the new 401k limits and IRA limits and HSA limits and Social Security increases and tax bracket bumps and standard deduction increases for 2024.
A lot on the plate.
Yeah. What's your favorite of these increases?
Well, I'm a big fan of the standard deduction.
Yeah,
I enjoy that a lot.
Okay.
and the 401k increases is pretty good too.
Yeah, I think going from 22,500 on the 401 to 23,000 is my favorite.
Yeah.
Yep.
Nice.
So let's go through these really quick, and let's have a conversation about what we can do to take action to benefit from them. So for the 401, it's going up $500 whether you're under age 50 or over age 50.
Mm-hmm.
So 23,000 for me, 30,500 for you.
Not quite.
Not quite. Okay.
Yeah.
All right.
Another year or so.
Another year? Wow. All right. So what's a common, misnomer on maxing out my 401?
What we hear people say all the time is the max out. They're thinking that they're getting the maximum match, right? So if they put in 3 and their company gives them 3, they could think that's maxing out. It's amazing how often we run into that. That's not the case at all, right? Obviously, that's the maximum match, but it's the maximum account limit that we really talk about when we talk about maxing out and making sure you're getting to that IRS limit of $23,000 in 2024.
That's right.
Yeah.
Yeah, we get that a lot. And recently, a new misnomer has risen up enough. It's come up enough where I feel we need to address this.
Mm-hmm.
And this would be, oh yeah, I'm getting the 23,000 between the employee contribution and the employer contribution. Yeah. I can't go over that, right?
Yeah, right. No, that's bad information.
That's correct.
Mm-hmm.
That's right. It's bad information, what I said.
Mm-hmm.
You can do next year 23,000. Okay?
Yep.
And so let's say you make 100,000. Well, guess what? You could have a 4% match for 4,000 and get in 27,000.
Yep.
And if you're over 50 next year, you can do 30,500 plus that match. Yeah. and get above that. Okay? So keep that in mind. My call to action would be look at your gross pay, divide the limit, either 23,000 or 30,500, into that gross pay.
Mm-hmm.
Let's say you make 100,000, so that's 23% or 30.5%. Those are big numbers.
Mm-hmm.
But the challenge is, right, if we follow the peak income 360 formula, to get at least 15%.
Mm-hmm.
All right? But if you make a ton, right, you should be able to hit these numbers. Okay?
Yeah.
So shoot for the max. You can always lower it later.
Yeah, for sure. But it's good to bring this up too, because we're getting a $500 bump this year, but the year before we got 2,000. So if you haven't, you've missed last year's episode on the plan increases, it's important to revisit that.
For sure.
You could be leaving a lot on the table.
For sure. And maybe you have another paycheck left this year.
Yeah.
If you have a big bank balance, right, put 100% of your pay in for this December contribution and top it off.
Yeah. Good idea.
So IRAs. So we don't see a lot of IRAs anymore, but Roth IRAs are big. And that's going up $500. So 7,000 if you're younger, 8,000 if you're over age 50. So, maybe you want to do a monthly Roth IRA. It's time to adjust that. Okay. Or if you do a one-time contribution, pay attention to the limits. Or maybe you're doing a backdoor Roth.
Yeah.
Okay. If you make too much, you can do it back to a Roth. It's 7,000 and 8,000 this year. Another one that's going up a lot is the HSA. So for a family, a younger HSA contribution would be 8,300.
Yeah, percentage-wise, that got a really big jump over last year.
Yeah, I don't understand why. You know.
Yeah, unless they're just realizing. I mean, healthcare is going to be a major expense for most people.
Maybe that's
trying
it.
to give us the capacity to address it.
If you're over age 55, so this is a little bit of a difference, but I'm not sure I realized this.
Mm-hmm.
If you're over age 50, that's the change for 401s and IRAs, but for HSAs, it's age 55 plus.
Mm-hmm.
And so that's going to go up to 9,750. It's getting to be quite meaningful.
Yeah.
So the other things that are happening are Social Security is getting a bump, over 3%. And then your favorite one, the standard deduction, that's getting a bump. And then also all of the tax brackets will be raised up with inflation. So not as much as last year or the year before, but inflation is leveling off.
Mm-hmm.
Not to say that the increase isn't painful, but the rate of change has been slowing.
Yeah.
In fact, the last report was 3.2%. So that's
better than expected, wasn't it?
Yeah, it's getting kind of back to normal.
Mm-hmm.
Okay. My prediction is that it continues to lower into the spring.
I think so.
So these are things that most people don't pay attention to, but it's important to understand. And if you need some help, if you want to sit down and figure out what new numbers for 2024 make the most sense for your financial plan, we're here for you. And you can schedule an appointment online at peakwm.com. And that will do it for episode 204. See you next time.